You should be able to play back any or all of Market Watchers Live at your leisure. If you're unable to attend the show live, you can now go to www.stockcharts.com/webinars. Follow the link to Market Watchers Live and play back the show. Each show will be archived on our site until the next show begins, so roughly for 24 hours. If you'd like to review an older program, you can now find those at our YouTube channel or on Facebook. During today's show, please feel free to submit your ticker symbol requests, questions, and comments using the chat window next to the video player. Later in today's show, Aaron will provide me stock symbols from your questions, and I'll use those requests in the 10 and 10 segment at 12:50 Eastern Standard Time, where I'll attempt to annotate 10 stocks in 10 minutes. Market Watchers Live now airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. If you'd like to be part of the show, you can reach us via our chat room or Twitter. Our Twitter handle is at Market Watchers Live. That's at MKT Watchers Live. As you leave today's show, we'd love to get your feedback. In the lower right portion of your screen, you'll see a How Do We Do section with a link to a very brief survey. We'd love to know what you think of Market Watchers Live, and please let us know if you have any suggestions for future shows. For those of you joining us for the first time today, welcome to the show. You picked a great show to be here for, and certainly we're glad you're with us. And for our regulars, welcome back. Just a couple of quick announcements before we get going. Today in the house, we have Julius de Kempenaer. He is the creator of the RRG charts. Everyone loved having Julius on last time, and he is back for a return visit, so we'll be speaking in just a couple minutes. On Friday of this week, I'll be discussing my trading strategies using the MACD. So if you're unfamiliar with the MACD or you just want to maybe get someone else's opinion, please feel free to join in on Friday for that special. And then this Saturday, we have our first Chart Watchers newsletter of December. So that will be coming out on Saturday. It's going to be really interesting to get everyone's thoughts on what's going on in the market with another huge rally here over the past week or so. And next Wednesday, December 5th, Tushar Shande will join the show. He is the creator of the Trend Meter and has a blog here at Stock Charts. So it'll be really interesting. He's a momentum trader. Would love to get his thoughts on what's taking place in the market. So make sure you mark your calendar for next Wednesday, December 5th, as we have Tushar Shande joining the show. And with that, let's get into the action. First, let me bring in my co-host, Aaron. How are you doing today, Aaron?
I'm doing quite well. Thank you very much. Finally getting some cold weather here in Southern Cal.
Uh-oh. Wintertime. What's that mean? 75, 80?
Well, actually, this morning when I was on my patio with my coffee, it was a cool 40 degrees.
Oh.
Right?
Wow.
I know. So
I'm surprised you went outside.
Well, every morning I go outside with my coffee. That's my wake up before I come in and start talking with you guys because, you know, it kind of puts me to sleep. And just kidding, obviously.
Well, that is awesome. It actually, after all the heat you've been through, actually, I imagine it feels pretty refreshing.
Absolutely. Super happy about it.
Not to be staring out into those fires and everything that you had going on the mountainside.
Oh, I know. It's definitely welcome. Now we're going to finally feel like winter.
Yep. I also want to bring in Julius, our special guest today. Julius, you were here, I don't know, probably a month ago talking about RRG charts. Everyone's been clamoring to get you back. So it's great to have you back on the show today, my friend.
Yeah, thanks, Tom and Aaron. And I'm flattered, guys. I'm really happy to be back. And I hope that we can, do whatever you like and give you some new and fresh information or brush up on some old stuff that may have, dropped away.
Oh, this is going to be a great day to have you on here because we're seeing some pretty significant rotation in the market. And that's what you do with your RRG charts is you're looking at that relative rotation and plotting it on a graph. So it's going to be really interesting to see how things have been evolving and what you think about the action. So we're going to get to that, and we're going to bring Julius in here in just a few minutes to go through all that. But before we do that, let's have Aaron go through the agenda, go over today's topics, and then give us that first market update.
All right, and here we go. Kind of got a little ahead of myself already. I'll be giving you 2 market updates today at the top of the show shortly, and then near the end. Talking technically, we're going to look at a few interesting items. Obviously, technology is a big that and the rotation into financials. Those are the big news items, I think, for this morning. So we're going to look at that. And of course, Julius is here. We're going to do a 10 and 10 to 1. First stock we're going to look at is American Airlines, AAL. So if you want to go take a peek, take some notes, and then you can compare your notes to Tom's. And then, very special, since Julius is here, we're going to have him take the 10 stocks we get for the 10 and 10 to 1 and put them in an RRG for us. So you'll learn how to do that. Plus, you're going to see what they're telling us based on what you give us. We'll look at some momentum sleepers, and then finally mailbag and wrap up. But with that, it is time for our first market update. All right. Of course, I've been looking at interesting charts here. All right, I'm going to take us to our candle glance so we can get a peek at what's going on here. And I think the picture is very clear when we compare the NASDAQ with the rest of the indexes. Of course, we're now starting to see the S&P 500 was in the black earlier today, but now we are seeing it moving down. Hang on, I'm sorry about that. All right. We can see it's now back into the negative. NASDAQ's been struggling all morning long. We're going to look at some charts of the top holdings in the NASDAQ 100. I wanted to show you support levels. Russell 2000 is still positive. Small caps doing okay, up slightly right now. Wilshire 5000 has followed, obviously, the S&P 500 down into the red. Treasury yields are up, and they're reading right now at about 23.81. UUP, the dollar is now down. It had a nice open this morning, but it is now tumbling lower. We could see commodities are struggling big time, and more than likely due to USO and seeing this really steep drop that just happened within like the last hour. We can see gold has a gap down, but we are forming a small double bottom. So we may see gold come back up above 122.25, but currently reading at 122. VIX is rising. People are getting nervous, which is interesting. So we're getting a reading right now of 1091 on the VIX. Still a very low reading, but interesting to see it rising at this point. Declines, leading advances, not a big surprise there. I want to take you to the market summary so you can see the comparison mainly of the sector spiders, and that's going to give you a good vision of what's going on there as far as sector rotation goes today. Clearly, technology is getting hit, slammed really today. It's now, when you look at XLK, it is down more than 2.75% right now. Yet financials, which are leading, are up almost 1.75%. So clearly some rotation going on there, possibly from technology into the financials. Look at retailers. We went over a lot of the retailers yesterday when we looked at Cyber Monday stocks, and wow, they're hitting the road here, moving higher into the December, getting ready to hit December. Banks also doing well, not a surprise, with financials leading. Semis, disk drives, computer technology, all of these down more than 3%, with semis down almost 5.25%, actually now down 5.25%. So we're seeing some really interesting rotation, and technology is getting hit rather hard. And with that, that completes my first market update. But before I pass it over to Tom, I did want to give everybody a look at some of the top holdings in the NASDAQ 100, just so you can see who is contributing the most to some of these problems. Apple, which of course has the highest in the NASDAQ 100, has dropped. We now see a double top here, which is certainly not good. And then we've actually gotten an execution right now below that neckline. But we can see there is some support here at about 165 for Apple. I would be holding on to that support, and hopefully it will continue to hold on to that support, because if we move past that, I would be looking down here at 150 and 155 for Apple. And the next one I'm going to look at, of course, is Microsoft. Very quick. So Microsoft doesn't look quite as ugly as Apple at this point, with this consolidation zone going across, forming some really nice support after that gap up in late October. So we'll be watching that 82 level for Microsoft, but it doesn't look nearly as bad as some of the others that are in. Amazon took a big hit. I know we were looking at it yesterday with Cyber Monday, and it was doing quite well, but now you can see really bad drop. We're almost down 4% for Amazon at this point, but we've hit some interesting support here at about, well, a little bit above 1130. So we'll have to see if that can hold, but I suspect that it will not. And I would be looking for a move at least down to that 1125 level. And that's the ones I wanted to show you. And you can see the PMO. I didn't talk about those on these top holdings, but you can see most of them are overbought and they are turning back down. So I found that to be very interesting. So Tom, I know we're talking about NASDAQ and technology doing quite well today, but we do have some support levels out there. What do you think? Are those going to hold in your opinion? Or are we really starting to see some serious sector rotation?
No, I'm looking for more rotation. I mean, you got to keep all of this in perspective. And I read this morning that technology, prior to today, technology was up over 10% this quarter and 38% year to date. And it's clearly been the leading sector. And the one thing that you have to understand about bull markets is that market rotation is a hallmark. I mean, that we go through periods, because it hasn't been in our recent past, you may not remember, but the XLY, consumer discretionary, was the main driver of this bull market from 2009 to 2015. But over the past 2 years, that area of the market has kind of floundered, especially with retail struggling. So, all the focus has been on these technology stocks and the names that, everybody normally talks about, especially, some of the semiconductors, which have just been absolutely on fire to the upside, and they just need a rest. And I think what we're seeing is the start of that rest. So I'm not overly concerned about it. And the main reason, again, is that there is rotation. I'd be much more concerned if all 9 sectors were down today and technology was getting blasted. But that's not really the case. That money is rotating. We're seeing it move into the financials. We've seen it move into some of the industrials, the consumer discretionary retail that you talked about, leading to the upside. Banks and life insurance companies within the financial space just absolutely having a huge day. So the money isn't leaving the market. It's just simply moving to other areas that previously had consolidated. And I'll talk about that more in just a couple minutes. And I know we're going to get into some really interesting discussion with Julius about that as well. But before I get into all that, I do want to mention that earlier this morning, we had the Q3 second estimate of the GDP come out. And the first estimate, the initial GDP reading that came out last month, was plus 3%. And the market was expecting it to go to 3.3%. And that's exactly what it did. So there was no big surprise there. And I think that really helped to lift the treasury yields. Money rotated out of treasuries, and that sent the yield moving higher. So first, let me pull this chart up, the TNX, so that you can kind of take a look here. We did get up to 240 earlier, 239.5, so pretty much 240. And while it looked like we were maybe breaking down, and we talked about this yesterday, where we were going down, the yield was going down, threatening this triangle, notice it printed a hammer so that the yield actually rose into the close near the high of the day and held this trend line. And now we're seeing the break to the upside. And this looks like a trend line break. This isn't something that's close. This looks like it's pretty significant. And so what I'm talking about here, I'll go ahead and draw this in here. But if you take this trend line and just drag that down there roughly to that level, and then the bottoms here. Remember yesterday we had that red candle during the middle of the day, and it looked like this trend line was breaking. And we had a discussion about trend lines and how useful they are, or sometimes their limitations. But I think pretty clearly this move today is, unless we get a major reversal this afternoon, it looks to me like we are breaking out on the yield to the upside. And this is what I would expect based on the prior uptrend in this consolidation period. And that is good news for financials, and it's very good news for industrials, and not so good for utilities, REITs, and at least for now, the money that's fueling the financials to the upsides coming out of technology. So, and again, I'm going to talk about that in just a couple minutes, but I thought that this breakout on the 10-year Treasury yield is really important today and was certainly worth mentioning as we get started. Within the financials, take a look at the bank index, the Dow Jones U.S. Bank Index. Huge move yesterday, another big one today, and we have cleared that prior high. So we are breaking out in the banks. So it's certainly not bad everywhere. It's just bad mostly in the technology arena. We take a look at life insurance, same thing. Huge move yesterday, and then a breakout today. And notice on the life insurance as we were moving up, see how the MACD was kind of rolling over here, starting to show that price momentum was deteriorating to the upside. That sent prices down in life insurance companies down to the 50-day moving average. That's where the index went. Check out that MACD, went right down to the center line for what I call reset. And really what this center line is, and I'll talk more about this with my discussion on Friday on the MACD, but all the center line is whatever two moving averages you're using for the MACD, and the default settings are the 12 and 26 period EMAs. But the center line just means that whatever moving averages you're using, they're the same. So normally when the MACD is rising like this, it's telling you that the short-term moving average is pulling away from the long-term moving average. That is the essence of bullish momentum. And the opposite, when we go below the center line and moving down, it means the short-term momentum is strengthening to the downside. But here you can see we're coming off a center line support, starting to turn up. I think this group, the life insurance, the banks, financials in general, I think look really good. The other thing, I wrote about this yesterday morning. I was looking for the transports to begin to strengthen, especially into year end. Take a look at the transports the last couple of days. Huge moves to the upside. And in particular, I was watching railroads and the truckers for breakouts. And look at what's going on here today with the railroads. Beautiful breakout here. And then if we pull up the truckers, DJUSTK, a breakout here as well. And once again, you can look at the truckers, higher prices, lower MACD, kind of, not very good action for a while afterwards, and then a big move to the upside. In retail, let's pull up the retail chart quickly. XRT, talked about trying to get through 42. Well, look at yesterday's action and today. I think we're through 42. That's not a problem anymore. It looked like a hot knife going through butter there. Autodesk, we've talked about this one a lot in the past. Earnings were today. Check out the decline here on Autodesk. This is why I don't hold into earnings. This was a great looking chart. I don't remember exactly where I got out. It might have been on this little bit of a negative divergence on the breakout. I know it's been a week or two since I've been out of it. But this is why I would not hold into earnings. I just don't like waking up to that. When you're down 15, 16 bucks or whatever it was at the open, the entire gain would have been lost just holding into an earnings report. So anyhow, I thought I'd mention Autodesk. And by the way, they cut their subscription guidance. That was the reason that the stock is down so much. I didn't look to see if they beat top and bottom lines. I just saw cut subscription guidance. And anytime I see cut guidance on anything, it's not going to be good. And so that certainly is the case with Autodesk. I did want to pull up Wayfair. I didn't actually look at Wayfair, but I saw the news that they had reported 53% year-over-year increase in sales over this past holiday weekend. So we got the gap up earlier, but it looks like maybe some of it was already built in because we had a huge run-up prior to the release of the news. I would expect, though, that we would probably hold this rising 20-day moving average, especially given how bullish a lot of the retailers are right now. So I think while we're pulling back here, and that bearish engulfing candle, if it sticks, may send us down for the next day or two to that rising 20-day. But that's where I would expect maybe to see a reversal on Wayfair. And then the last thing I wanted to get into before I bring Julius in, because this is going to be a great segue. In my blog this morning, I had written about the XLF. And when we had the huge run back in September and October, you can see at the very peak, we had higher prices on the XLF, but the MACD had rolled over. And if you look at the XLF relative to the S&P 500, we had great strength. But as soon as that negative divergence printed, we saw more selling. And look at the relative strength. how financials just kind of fell apart for a while. Had to catch our breath. We were very overbought. You can see that the RSI back in October, early October, was up in the well into the 70s. And notice during the selling, we went back into the 40s. That 40 area tends to be great support in an uptrending stock or ETF. That's exactly what we saw with the XLF. And now the leadership is returning back into that group. And the reason I bring this up is that I also wrote this morning about the XLK. I did not like technology. I even suggested somewhere down here that maybe take some profits, at least partial profits in technology. Here's the leadership, and this is looking really similar to what we saw in the XLF. The relative strength was awesome, but on the most recent high, look at the MACD. And if you go back over here into March when we had a higher high and a lower MACD, a negative divergence, we went sideways and actually down a little bit till we hit that 50-day moving average. And then probably the next time was maybe over in this area. Looks like maybe right in here we had a little bit of a negative divergence, went down almost to the 50-day moving average. And now we're seeing it again. And look at the RSI. I don't like those blue mountains moving all the way up into the 80s on the RSI. That normally is a sign we need a pullback, negative divergence. There's a lot going on here that just tells me that we're going to see rotation from technology into perhaps the financials and the industrials now that they've had their pullback, and materials. XLB is the same way. We had a negative divergence there. So with that, I think this is a beautiful segue in with Julius. I don't know how you're looking at your RRG charts right now, Julius, but it seems to me, and maybe the first thing you can do is maybe just pull up an RRG chart and just show some basic instruction on how you construct these, and then show, kind of what I've been talking about with the technology and the industrials and the financials. And what are you thinking about this rotation, and how are you approaching the market?
Yeah, I will definitely do that, Tom. Let me share my screen first so everybody can see what I am talking about. Share my complete desktop. Yes, here we go. What I've done is, I have not prepared a full-on presentation, because I think that, I don't know, maybe 75 to 80% of the people who are listening in have seen an RRG one way or another, or have looked at it on the system. What I'd like to do is really quickly do a little bit of a wrapper and a recap of what it actually is and what are we actually looking at. A little bit of the basic interpretation, and then we go to, as Tom suggested, some of the live charts. And if you have any ideas, questions, just please drop them in the chat box. I will try to monitor them, but otherwise I hope that Aaron and Tom will be able to pick up some interesting topics for me to talk about later, so that we make sure that I'm not just talking away out in the blue about stuff that you don't care about, but that we actually address some of the subjects that you'd like to know more about. So with that, let me show you my first sheet, and you've probably seen this, but it's very, very important to underscore that the relative rotation graph is showing you trends in relative strength of multiple securities in a universe, and we do that against a common denominator and against each other. Be very, very careful, because even after RRGs are now on various systems for about 6 years, I still hear people say that they show relative performance as such, and that is really not the case. If you would draw an RRG based on pure relative performance, they would be all over the place, the observations. You would not see a rotational pattern. So be very, very aware of the fact that we're looking at trends. That's why it rotates. That's why you see these slowly curving tails on the various subjects. It's because we're looking at trends. By default, it means that we're trend following. That's very important. I will get into what we call RRG headings later on. We've touched about that subject previously, and it's something that I'm still doing a lot of work on because I think it'll help us pinpoint potential entry and exit signals. So what is it that we're trying to solve with an RRG? It's exactly the picture that you see right now. This is a picture, it's a perf chart showing you the performance of all the sectors over the past 200 days. And you see they're all over the place. And over the past 200 days, the orange one on top, and I think that is utilities at that time, chart is printed a while ago, was utilities. And the brown one at the bottom was financials. And clearly, utilities did way better than financials at that period of time. But if you look at the situation, let's say in July 2016, if you would have started there, it's very clear that financials have outperformed utilities. But on a chart like this, it's very hard to spot. And that is the problem that RRGs try to solve. Because here you have an RRG of the 10 sector ETFs against the S&P 500, against SPY. SPY obviously being the center of the chart here, and everything else rotates around it. Now, the building blocks for an RRG are the JDK-RS ratio and the JDK-RS momentum. Those are the two indicators that make up an RRG. They are plotted on both of the axes. And for me, it's very important to tell you that I would never just simply trade off of an RRG. So the fact that something happens on an RRG, for me, is not enough to get into action. I would always urge you to take whatever you see on an RRG, bring it back to your normal workflow, whatever the chart is that you're working with. You see Tom's charts all the time using the MACD and the RSI, etc., classical stuff. Please use whatever you're familiar with, stochastics, PMOs. I don't know. I am not going to sit in your chair and tell you how to do your analysis. RRGs are an attempt to help you to get trade ideas. So when you look at an RRG and you see something happening and says, hey, this is something that I'd like to look better at and more in depth, that's the stock that you take into your normal charts. Or if you have some sort of a workflow that comes up with a bunch of trade ideas, throw them at an RRG and see if they get confirmed or negated. Now the chart here is a little bit colorful, but what it shows you is the interaction between the RS ratio and the RS momentum, and how that relates to the position on the RRG. So the green areas obviously are the leading quadrant. The orange ones are the weakening. The red ones are the lagging, and the blue ones are the improving. And if you look at the chart and go through time, you will see the various positions. So for example, here, this is an interesting one because we go straight through the benchmark, both at the same time move above 100. That puts the XLK is the chart that we're looking at that point in time into the leading quadrant. And it remains into the leading quadrant until the RS momentum line crosses below 100. So you see that RS ratio is still above, RS momentum is below 100, and then it drops into the weakening quadrant. And then you see that RS ratio is not completely dropping, it just shies off that 100 mark, and we rotate back into leading. And then all of a sudden we jump into the lagging quadrant both at the same time, pretty much how we entered into the leading quadrant right here. We stay inside lagging until the RS momentum crosses above 100. And here you see that it stays there for quite a long time. We had a very big trough in RS ratio. It's far to the left, deep inside the lagging quadrant. Needs a lot of time before it gets back up. And then we see that finally it moves from improving into the leading quadrant, and then it moves back, etc., etc. And this is how you can relate your RRG back to your normal chart. So, yes, please. Next. Yes, here we go. Oh. There you go. One of the things that a lot of people ask me is the difference between weekly and daily charts. I do that really quickly because I realize that we have covered this subject previously. Just for those who haven't heard it, it's a question that I keep getting. Why does it look different on a weekly and a daily RRG? Well, the reason is that it is a completely different chart, just like a weekly and a daily bar chart. What happens is that a daily based RRG shows you a lot more granularity and a lot more details. And a daily RRG chart basically holds 5 times more observations than a weekly. So if we browse through the charts, and this is a good example, this is a weekly bar chart. And you see that. And now focus on this period from April to, let's say, halfway through July. It's almost a straight line on the weeklies. Every bar pretty much has a higher high and a higher low. RS ratio above 100. RS line, that's the trend that we're trying to follow, is moving higher all the time. Now, if we switch to a daily version of this chart, this is exactly the same time period. Look at how much more detail you see from that April trough to the late July high. You see that there's actually highs and lows being made, and you see a high-low rotation every time. Similar for the raw RS line that shows you high-low rotations. And you see that the RRG lines, the RS ratio and the RS momentum line on a daily basis fluctuate much more. So that is why it looks different from a daily perspective and a weekly perspective. Now, I've put together this little video. This is the snapshot, the static picture of XLK over 5 weeks. Look at the period here. This is 5 weeks, and we can look at the rotation, how it moves through time, and this is one of the great features at stock charts. I use it all the time. How this rotates. Now we move to the daily version, and I put this at 25 trading days, which covers 5 weeks, 5 trading weeks. You see that the tail is longer, obviously 25 observations instead of 5, but you already see that there is much more rotation going on the dailies than there is on the weekly that you just saw. And here's the daily rotation. You see that it's going back and forth much more. It's much more noisy, much more irregular. So it depends a little bit on your trading style, how active you are, and how aggressive you want to be, what you would like to use. So let's stop this and go to the next one, because this one is really interesting. I have overlaid those 2 charts together, and what you can see now is the relationship between, oh, that was a good idea. You should be able to see. Come on. I love technology when it works. Here you go. There you go. So you see that now in the green, and now adding to weakening the XLK, and you see the dailies just running circles around the weekly, basically. So I think this is a good way to explain to you how the daily and the weekly RRGs are really different from each other, and the best way to compare them is basically a daily and a weekly bar chart. This is the RRG of the Dow Jones Industrials, and we're going to look at a little bit of the basic interpretation. Top right-hand corner, that's what you pretty much want to hold, or when it's just entering it, maybe you want to look at a buy, because these are the stocks that are showing a relative uptrend against, in this case, the Dow Jones Industrials. Now, after a while, when it drops into weakening, that's where you start looking for sells, or what I call rebuys. And rebuys is when it turns back up, and without leaving weakening, without going into the lagging quadrant, going back into the leading quadrant. That's a rebuy for me. That's another attempt, another opportunity to get back into the game. When it drops into the lower left-hand lagging quadrant, you might want to avoid it. From a relative perspective, these are the stocks that are underperforming your benchmark. So be careful. If the market goes up, then stocks that are in the lagging quadrant don't necessarily go down in price. They can go up as well. They just don't go up as fast as your benchmark. And then again, when we rotate into improving, that's where you look for your buying opportunities or your resells, just opposite of the rebuys. In short, the way to look at this is, next, please. Here you go. Crossing over the 100 line, above 100 on the momentum, I would call that a conservative buy. On the other way, it's a conservative sell. Why is it conservative? Because before a stock or a sector moves from improving to leading, there's already a lot going on from both a relative perspective and a price perspective. Because it's a trend following system, we need time for the trend to turn around and for the indicators to pick up those trends. So my time frame is usually weekly, and that's quite funny when I hear Tom and Aaron talking on a daily show. You cannot update a weekly picture every day, can you? I mean, that's going to be very, very boring. So when I hear people say, "Oh, what's going on in the markets? The Nasdaq is down like 1%. Oh my God!" I think, what's going on? 1%? That's absolutely nothing. So if you look at a weekly chart, it's just a little bit of a blip. There is no need for any panic. And I think that RRGs, especially on a weekly time frame, can give you a very good view into the bigger picture of what's going on. It's one of the things, the way I like to describe it, is giving you the big picture in one picture, because you see everything on the same chart. Now, the crosses on the momentum axis, I would call those aggressive buys and aggressive sells, because as we've seen, there is a very good possibility that something moves from lagging to improving and then rotates back into lagging. So what you are doing is you are picking up an intermediate move. If that's your game, please go ahead. Just be aware of the fact that if you're doing it on the lagging side, that you're buying a rally into a longer term downtrend, and the same goes for aggressive sells.
Hey, Julius.
Yes, Tom.
Yeah, I'm just watching you go through this with the conservative buys and sells and aggressive buys and sells. And I was just thinking about this in terms of the MACD and the way I kind of view the MACD. And the aggressive buy that you were showing there, where you go from that lower left quadrant, the lagging, into the improving.
Yes.
To me, it's kind of like when you're getting a MACD crossover, but you're below the center line. So you've been in this downtrend for a while, obviously.
Yeah. Pretty much the same idea. Yeah,
you're starting to show some strength, but you're not leading. You're just you're beginning to show some strength. I know exactly what you're saying, that a lot of those sometimes can be false signals, and you get another double bottom or another push to the downside. So I kind of look at it, and I don't know. I love your thoughts, but
yeah, I call this the weakening. I call a warning signal. It's something that, the trend is basically still good. But we've got a little bit of a blip going on. Some selling is coming in, relative selling in this case. So be careful. And then when it turns back up, while it is in weakening, then by all means, trend continues. Just stick with it. Only when you start to move really close to the 100 level, that's where you start to pay attention, because now the risk of crossing over into lagging is absolutely getting higher. But you're touching on a good point, and I was already ahead to the next slide, because before we start looking at exactly that, what you just told us about the divergences, and I want to look at that on a live chart, I'm quickly going to introduce or reintroduce that RRG heading concept. And heading, you've got to look at from as if you're on a sailboat or navigating the seas like a compass. It moves from 0 to 360 degrees. And the 0, 90, 180, and 270 degrees are important, because if you think of those as the quadrants of an RRG, basically anything that heads into a northeastern direction is good, because that is moving higher on the RS ratio axis, and it's moving higher on the momentum axis. So that's good. And that can happen basically anywhere on the chart. On the opposite side, anywhere between 180 and 270 is losing values on both axes, which is a negative. Now, to illustrate that, here you have the last two observations of one of the sector ETFs. And the heading is looked at from, let's call this T minus 1, and this is T. So this is the actual price, and this is the previous position. And in this case, it's at a RRG heading of 60 degrees. Obviously, 45 degrees is optimal, because then we're having the same pace on both axes. As you can see, this is happening inside the leading quadrant, but I could see a tail like this anywhere on the chart, even in lagging. So that is giving us a little bit of an extra tool to look at and an extra way to look at it. And while I was preparing this, I thought, how can I best describe this? So the basic RRGs with the tails rotating, I would say that's trend following. That's 100% trend following. If you start to look at RRG headings, which is basically moving from, anywhere else into, let's say, the 0 to 90 degree area, or the 180 to 270 degree area, that is probably coming close to what we call mean reversion, because you're coming from an extreme and you're turning around while you're still in the previous trend. And this is what I mean with a weak heading. This is an RRG heading that is between 180 and 270. It's still in weakening, but it's losing value on both axes. Now, this I will save for a little bit later, and I will bring that to a live chart. Let me quickly talk you through the top level approach that I usually use. And RRGs are a great tool to use a high level approach and drill down through the various layers of asset allocation and opportunities in the market down to individual stocks. But what we're looking at here is an RRG that I always keep my eye on. This is the one on asset allocation. This one shows a number of asset classes. And what we show here are a number of ETFs, SPY for equities, commodities, a couple of bond ETFs, bond indices, and Vanguard REITs for real estate. And the center of the chart, so the benchmark of the chart, is the VBINX, and that is a Vanguard balanced index fund that holds 60% equities and 40% bonds. And I just told you that I always jump to my regular charts to look at stuff in more detail. For this one, come on, I really don't need another chart. It shows me that SPY is still the preferred asset class. This is all bond related, and this one is real estate. Bonds are heading further down. SPY is heading further up. You see a little bit of a dip here, but it's nothing major. The spread is gigantic. So from this perspective, SPY or equities is still the asset class to be there. We might go into a little bit of a rotation. We might go into weakening, but it's, as far as I can see, it'll be a long time before equities will hit anywhere close to the lagging quadrant. We'll keep an eye on it. I cover this universe roughly once a month in my blogs, once every 4 or 5 articles to keep an eye on, because this is really the longer term view. So equities, still pretty much okay. Now, the next one would be the sectors. So we're still confident on, no, I'm going ahead of myself. What I wanted to show you, because we always think that the S&P is the next best thing to sliced bread. But if you put things into a bigger perspective, and that's what we do here, here we have an RRG that shows you the various equity markets around the world. Pop it one back, then the data is filled. So we have the Nikkei, we have China, we have Europe, we have Singapore, S&P obviously, Hong Kong, emerging markets. And the benchmark here is the FTSE All World Index. It's an equity index that covers a lot of international markets. And look at this. Here is the S&P. So this S&P market, this is going straight up, day in, day out, week in, week out. It's going higher and higher. News wires are full of it. It doesn't come down. It's the best thing in the world. But look at this. You should have been in the Nikkei, or you should have been in China. These are the markets that have outperformed the S&P by a mile on this one. Now be careful, and the keen observer sees that the symbols that I'm using here are the actual index symbols. So the dollar and then ticker symbol to see the actual index values. And I compare it to an actual index. So these are not ETFs. that is very important to note, because if you would bring up an RRG with ETFs that track those markets, you would have a completely different RRG. And what you will then be looking at, because all those ETFs are quoted in US dollars, and you would actually be looking for the better part of your RRG at the rotation of the US dollar versus other currencies. So when you start doing international markets, when you start doing stuff that's quoted in different currencies, please always use your dollar index symbols to get a proper, pure, performance-based value of the performance in those markets. Now we go down to the, so S&P still good. Japan, China, really, really good. And we got TSC, that's Toronto, coming very close. And Europe, I'm sorry, it's my region, but you know, I have my money in US dollars and a little bit in Japan, because the European market is just not doing it at the moment. It's by far the weakest market in this universe. Switching to the sector chart, as I promised. Tom, are you going to cut me short when we have to get out for one of your segments, and then we'll get back later and talk about it? This is the RRG of the sector spiders that we've all seen so many times. And here, this is interesting, because here you see that XLK, the one that is tanking right now, according to everybody, because you know it's down 1% right now, or 3% in the index. I don't really know, but Nasdaq was down 1.25 earlier, and you see that it's not even putting a dent in this weekly trend. So we've got a situation here where XLK is still inside the leading quadrant. As a matter of fact, if you just look at the RS ratio, it's the strongest sector in the universe at the moment. Now, in order to get a little bit of a better perspective of what's going on, and if you're not too long trend following, but you're into a little bit more action and to shorter term trades, what you do is you change your time frame to a daily RRG. And make a note, XLK above 102 and around 100.5, well inside the leading quadrant. Now we'll update this chart to become a daily. And look where it is, right here. Inside weakening already for quite some time. And what you can do is you can scroll back through time. I do this with my arrow keys, just jump back through time to find when it moved over. And that was halfway through November. November 15, XLK on the daily started sending a warning signal that some short-term weakness was imminent. Now, how do you deal with that? That's up to you. That's up to your investment style. That's how you want to look at it. I'd say that the uptrend there is still intact, but it's going through a little bit of a rough patch. And we can bring that onto XLK. So, XLK SPY. So here you see the weekly RRG lines. They're still pointing higher. There's nothing wrong with this. It's not even putting any dent in it. And if you look at this relative strength line, it's still rotating higher, lower, higher, lower. There's nothing wrong until this line starts to make lower highs and lower lows, which are hopefully being picked up by the RRG lines pretty soon. The long-term trend is still there. And if you look at this chart, I don't think anyone will call this a downtrend. Maybe we all say, yeah, it's on the high side, which is what we said here as well. And then we had a few weeks of corrective moves, and we saw that happening here. Then it got very quickly picked up again. So not really too worried about it, but for the time being, technology is a little bit out of favor. And if we update this chart to a daily, I'm gonna make this only 1 year to get a better view.
Yeah, I think too, Julius, when you're looking at this is, the technology group has been straight up for the last few. I mean, we haven't even had a pause.
No.
So it's hard to really get too upset because we're having, a down day. I actually expect that technology will continue to struggle on a relative basis just because we went up so much and we're so overbought.
Well, that's it. Well, I could pull up a chart of Bitcoin and ask everybody whether they think that's a top or not. I mean, everybody is calling tops in Bitcoin and everybody's wrong. So, I mean, who am I to go against the trend? The only thing we see here is a little bit of a dip, and we see a warning signal from the RRG lines telling us that relative momentum is dropping, is rolling over. We're inside the weakening quadrant, but we're still, well above the 100 line. So even on the dailies, you could get a turn back up without going through lagging. So I'm not too worried about it, but I hear Tom mentioning the negative divergences that he was seeing in the technology sector in XLK. Let me just quickly. You're using the MACD. I can just bring up a MACD here, right? That's
one of the things I think that's really interesting. You and I were talking about this before the show, is that you showed the XLK on the daily chart moving from the strongest quadrant into the weakening quadrant back on November 15th.
Yeah, that's here. That's this one here.
Today's the first day we've really seen a lot of selling in technology. So, by design, the RRG is a trend following system. So you kind of think that maybe it would give you lagging signals, but at the same time, because you're comparing it to the S&P 500, it is looking at that weakening versus the S&P 500, and it actually started to show that 2 weeks before we started seeing a lot.
It's picking that up. It's still lagging because it's lagging in terms of the relative trend, but in this case with the divergence, it's picking it up fairly early. That's right. And
I just want to do something real quick. I'm going to take the screen from you, and then I want you to take it right back. But I want to show the financial, the XLF, and then I'm going to want you to rewind and go back and show on the RRG charts how the XLF has performed over the past couple months on your daily RRG. But this was a chart. This is where we had broken out on the financials back, and this looks like maybe around October 26th or so. We put in a bearish engulfing candle. We had a negative divergence, and since then we've seen really poor relative performance on financials until the last 2 days. And what I found interesting when we were talking earlier, and I want you to take the screen back and show everyone, you actually showed the XLF moving out of that strong quadrant well before that October 26th signal that I got. And so that's why I wanted you to just take a quick look.
That's the one that you were looking at. Let's highlight that. One of the little tricks of stock charts, you can actually, because now it's hard to, well, with the 10 it's not too difficult, but you can imagine when you have more stocks on your RRG, they become difficult to read. A very cool feature is you can highlight, in this case, XLF, and it will stand out. And that's very cool because now I can actually, see the rotation of XLF. Everything else is moving, but XLF is highlighted. So where did you see that original weakness? It was back in the middle of October. This is the daily. So we had right there. This was a really good one, and then it started to come down, and that was October 13th when it moved from leading to weakening. And then we had one of those situations where it picked up strength again, started to move up. This is good. I consider this good because we're still in an uptrend. We're picking up momentum. And then we move into leading, but it immediately turns around. And I can probably, the best way to do this is just really zoom in very, very. That movement back up was when we got that breakout with the negative divergence. And then like you showed, it quickly comes right back out of that. Yeah, and then it turns, it looks as if it goes backward. But I guarantee you that when we would be able to switch this from daily to hourly or 30 minutes, it would show you a rotational pattern on that time frame. This is just too quick of a move to show the rotation on the daily, but on the hourlies, it will definitely turn clockwise. And then we see it starts to move. And here you see another interesting feature that will help you to make up your mind. Look at the tail length. I always look at the tail length because the tail length tells me how much power there is behind the move. So this is pretty good. And then you see that it starts to shrink. You see, like in 2 weeks' time, here we have, I don't know, I should have put a ruler next to it or something like that, but it's like goes from 99.5 to almost 100. So that's let's say 50 basis points or 50 ticks, and then we move, and on here it's down to 25 basis points. So the length of the tail will give you information about the power of the move, especially if you look at the delta, the changes. And now look at this. You have this move is very small. This is a very small move. You know, it's only from this last observation to this one here. It's very small. And now we got boom, boom. Now we got a real big move. So on this daily RRG, you will get an early warning signal when things really start to heat up. In this case, on the downside, and then another one and another one. And now I have to zoom out again to make this visible. And now look at the tail length here. I mean, I have to do a Pythagoras equation to calculate what the length of this thing is, but I'll, you know, just by eyeballing it, if I do a pendulum swing here, it's over 100 points here. So this will give you information that it's now from a small move starting to be a real big move.
Interesting.
And now we are November 13, and over the last 2 weeks, we see it slowly picking up momentum, and then it turns, and now we got heading in, going into the 0 to 90 degrees, and it's crossing over into improving, which would make it a sector to do a deep dive, to have a better look at, because we know that it's still inside the leading quadrant on the weekly, but it's now picking up momentum again. So where we have technology rolling over, leveling off, we have financials. And just check if I'm not lying to you, but I'm pretty sure that financials is still, yeah, here it is. It's still inside the leading quadrant. You know, very short tail, nothing going on, just minding its own business, relative uptrend, you know, hovering a little bit up and down. Nothing wrong here, just a very good move. And then we went through a little bit of a down move, and that now seems to have come to an end, and we're picking up steam again inside the improving quadrant. So here you have a situation where the longer term trend is good, relative performance is good, relative trend is good, went to a corrective move and pick it up. And this is where you want to take a look at your normal regular chart. And this is the daily version. Well, obviously you got the break here, which is really good. This is picking up, this is reflecting, and you just show the rainbow chart in the beginning that I showed on the PowerPoint. This is where we move from red into blue again. And to me, if I look at this, this is an important low. This is an important low. It's higher. If we break above the previous highs here, there is nothing, you know, getting in the way for XLF moving higher. If we move this to the weekly chart, we'll get a little bit of a bigger perspective. Put it on, show you 5 years.
After this chart, Julius, we'll go ahead and take a break.
Yeah, I was going to say, I'm talking too much. You said 650, right? Okay, so now here, so this massive breakout with the gap on the dailies, on the weeklies just looks like a nice new high, as we've seen a few before. All honky-dory, just very good, no problems at all. And if I look at the relative, I actually see, you know, a very nice consolidation pattern. And if we break, I could probably draw a trend line over these highs, and when we take that out, we got a lot of new fuel to move higher. So yeah, all good for me. And if I then look at the RRG lines, you know, there is massive upside potential here. It's not nearly to anywhere extreme. So from a relative point of view, everything very good, and it's getting confirmed by the price chart right now.
Yeah, with the breakout, I agree.
Yeah.
All right, we're going to come back. I mean, I'm
gonna read a little bit of the messages and see if there are any, I call it thematic questions, that I can address a lot of questions in one go, and then maybe we can talk a little bit more on the individual sectors, or maybe pick out 1 or 2 sectors and go into the individual stocks to see if there's anything weird going on there. But I'm going to listen to you now, Tom.
All right, sounds good. And don't fret, everyone. We are coming back with Julius. This is a great conversation. And Julius has promised us that after we get done with the 10 and 10, he's going to put those 10 stock symbols on a RRG chart and kind of compare it. I guess use the benchmark S&P 500 as the relative, looking at relative strength versus that benchmark. But anyway, Aaron, why don't we go ahead and jump into the 10 in 10? I am going to go ahead and
get yourself all ready.
Yep, I am ready to go. Oh, by the way, look at Dick's. Yesterday we were talking about this as a bounce off the 20-day. It went up 10% in the last 24 hours. That's a pretty nice move.
Nice.
But anyhow, what do we got for today?
All right. So we did say we were going to start with American Airlines. So we'll go ahead and do AAL.
Yeah, I mean, definitely some of the airlines are bouncing back as well. They're not quite as strong as we've seen with the railroads and the truckers that I showed earlier with the breakouts. But still, you can see over the past week, 2 weeks, American Airlines certainly has been strengthening. I think the problem with this group right now is that it's just such a wide range, and we're kind of sitting between both resistance and then the recent price lows, which is support. We're maybe even on the upper end of this trading range. It's a pretty wide range. So I don't know that I have a trade here on AAL right now, but it has been getting back up above the rising 20-day and then holding it on pullbacks, I find bullish, and I'm overall bullish the market. So I'm always looking for a bullish argument with these charts. So I would use the rising 20-day moving average as a possible support area on any pullback.
All right. Next one I have for you is Ford. F.
All right, let's take a look at Ford. I don't like Ford as much as I like GM. I've said that before, but we are getting a nice move today. And look at the volume already, just a little past halfway point of the day, and this volume is already at 32 million. This is going to be a very heavy volume day, and we are trying to make a breakout. We had a negative divergence. Let me go ahead and just show you this. So if you look at the price action, you'll see higher prices. And you look at the MACD and you see a lower MACD. What do I look for? I look for a 50-day test and a MACD center line. There's your 50-day. There's your MACD center line. And now we're moving back up. Heavy volume trying to get this breakout. I think momentum is just starting to build to the upside. So I think a breakout here would be extremely bullish.
All right. Next one we have for you will be IBM.
All right. IBM. Let's see. IBM, I think, is starting to make up some ground, which is nice. And considering what technology is going through today, it seems to be ignoring it. It really wasn't participating on the way up. And it's also not participating on the way down, which is a good thing. I love the breakout and the heavy volume. It did come all the way back down to this price support area, nearly got down to gap support, which I was shocked. I did not expect that. But I think that just tells you what a lot of folks think of IBM these days. But here was the breakout above this prior resistance area that becomes support. We held it, and now we're starting to turn back to the upside. The trading range for me on IBM right now is 160 to the upside and probably about 146, 147 to the downside. We're in the middle of it, so if you didn't buy near support, I wouldn't be doing anything with it right now. But if I owned it, I would hold it and look for that 160 target.
All right, very good. Next one, VZ. The question was where to sell.
That's always the question, isn't it?
Right.
Yeah, buying's easy. You just hit that button, buy. Yeah, Verizon, another one that's got tremendous volume today. I'd probably watch to see if I can get this breakout. I think that would be an incredibly bullish breakout here. So I would be holding. Now, if you see this thing go up to above 51 this afternoon and then come back down and close below 50, leaving a really long tail and a false breakout over that high, I'd be a little bit more nervous about it. But I think this move to the upside has been on very, very nice volume. So a breakout, I would continue to hold Verizon. I think it's bullish right now. But let's see how we close today.
Okay, number 5, GM, General Motors. Trying to pick some throughout different categories, so it'll be an interesting RRG.
Yeah, GM actually, I was just talking about Ford and how it's been kind of outperforming Ford, and it certainly was in September, October. But I just showed Ford breaking out above the recent high, and GM is not. So we might be seeing a little bit of that relative rotation back away from GM and into Ford. That will be interesting to see how it looks on the RRG charts in just a couple minutes. But I still think we're in a bullish pattern here. It's just a matter of, exactly which level or what your time frame is as far as which level you want to get in. I think the rising 20-day is interesting. So we're just about sitting on that. But what I expect is that we'll maybe finish this cup and maybe move back up to that 46.5. And especially with Ford breaking out, if you have others in the group that are strong, I think it argues more toward the bullish pattern continuing and extending the right side of this cup up to about 46.5.
All right. Number 6, GIS.
That's General Mills, I believe.
Yeah.
All right, so now we're talking a little bit more on the consumer staple side, and you can see that the downtrend in this stock has been going on for a while, but very heavy volume on this. This is a spinning top, or actually more like a spinning bottom or high wave candle, where you've got a lot of indecision. That's what these tails mean when you have a long tail to the downside, long tail to the upside. You kind of have this small body on massive volume. Market's trying to figure out which way to go. There's a lot of indecision on very heavy volume, and notice we held that and then broke out of this sideways consolidation to the upside. So I am much more bullish on GIS now than I would have been probably 2-3 weeks ago. Now that we've gotten the breakout, I also like the fact that we're seeing this 20-day moving average rising, and we continue to trade higher and higher above that. So for me, again, I like to find pullbacks. I like to get into stocks after they've moved down a little bit in an uptrend. So I think that that 20-day moving average that's following underneath is should provide some really good support on the next pullback on GIS.
Okay. Let's see. The next one I have for you is Walt Disney, DIS.
Yeah, I was looking at Disney. This one actually, I didn't see it when it happened, but we got a nice bounce off the 20-day moving average here. See that volume coming in and breaking this downtrend? It's a little bit of a flag pattern where you got the flagpole going up and this little flag or wedge, and it broke out of that yesterday with increasing volume. Let me just kind of show what I'm talking about there. So the key is, first of all, with any kind of continuation pattern, you have to have a prior trend in play. Here's your uptrend. And then what I'm looking at here, I always like to do these patterns in black. It's just me. This is the way I do it. But from the top, I'm going to say right about from there down to maybe here. And then, I mean, you can kind of see it's kind of squeezing in this flag or pennant or wedge, whatever you want to call it. Big move up, heavy volume, light volume as it consolidates, and look at the volume pick back up again as it makes another move. I think Disney's clearly uptrending here. I like the stock. I just don't like it after it's moved, $3.50, $4 in 2 days, because it's not really a real fast mover. But any kind of a test, I think it's already starting to show, any kind of a test, that rising 20-day moving average is a buy for Disney.
Great. Okay, number 8 is going to be Graphic Packaging Holding, GPK.
It's in its gap support zone. It did have heavy volume to break below the top of gap support. Now it's, failing at the 20-day moving average. So I'm going to look for it to squeeze. I think this stock goes higher, by the way. I'm just looking for, best entry. And I would say for me, you've got the top of the gap right in there. You've got the bottom of the gap down in here, or maybe you just use price support. This is the range. It's a pretty wide range. So if I got in, I'd probably save some powder in case it gets to the bottom of this range. But you can see the MACD is now getting close to the center line. I think it's consolidating. It may not even go back down to the bottom. It may just kind of hold in here around 1470, 1480. But I think GPK goes higher. I love the volume coming on this gap up and the continuing move afterwards on increasing volume. So I think this weakness here is presenting an opportunity. Again, get those blue mountains on the RSI showing it's just way overbought. I don't like to chase. And now you get the RSI down in the 40s, which I think is much more palatable. So I like GPK. Exactly where it turns, I'm going to guess 1470 to 1480. Outside chance we see maybe a move just below 1440.
Okay. Number 9 is the transportation ETF Spider XTN.
All right, XTN. All right, XT. Well, first of all, I was talking about transportation. I love it. I mentioned it yesterday, and I think we actually did a "What Would You Do" or something on transportation not that long ago. But I was looking for a longer term, move into year end higher in the transports, just because we're in a bull market, and rotation is the name of the game. So when you get a group like transports that underperform for a while, I expect that next move to be to the upside. So here, I think the XTN looks like it either tested support or came really close to testing support. There was one level, but this is the one I'm talking about down here. You can see we came down tested here. We almost got down here again. So this is the key longer term support area. But now that we're getting this breakout, I actually think the rising 20-day moving average along with price support at about 61, I think this is going to be the new support zone. I would not be looking for another move back down here. I think transports look really good heading into year end.
Okay, and the last one I have for you is MasterCard, MA. Really bad day today.
Wow. Yeah, I'm kind of surprised because a lot of the financials have done better. But, you do have a negative divergence. It's been trying to hold above its 20-day moving average for quite some time, even though the MACD continues to shrink, and move lower. So just pointing this out, you can kind of see from the very start at this high up here, you can see that as we kept moving higher and higher, the MACD kept moving lower and lower, and even you could go all the way out to here with this recent higher price. And again, MACD continues to go lower. So I'd be looking for some consolidation. I don't think this is going to turn into a massive selling event, even though today is obviously pretty weak. I would expect maybe worst case, we get down to the 137 area down in this level that we saw back in September, or maybe the breakout after that. So this is a zone for me that I'd be looking for maybe on MasterCard on continuing weakness. And we did hit the 50-day today, by the way, with a negative divergence. So it's possible that's all we get, especially with it being in a very bullish financial area of the market. But if we got it down to 137.5, 142.5 into that zone, I would feel pretty good about taking a position. I think if we took the trend line and drew it across here, probably be right about in that area as well. Let me just do that real quick.
Okay. And then Julius, when you come back, you can get ready on an RRG chart and I'll read out all these symbols that we just did.
Yeah, if you give me, well, we'll do it on the fly. I'll take the screen and then you give me the symbols and I'll show you how to do it.
Excellent.
This trend line on MasterCard, you can see kind of comes in right at the bottom of this zone. So the further this drops, I think the bigger the opportunity gets on MasterCard.
Mm-hmm. I have to agree with you there. That's really interesting.
And that is it.
All right, Julius, go ahead and take the screen when you're ready, and I will read off these symbols.
All right. So here we are again. So what you see now is just the basic RRG, which you get if you go to free charts and then scroll to RRG. That it brings up this chart, which is a number of general indices against the S&P 500. Now, Aaron, if you tell me, I'll just delete what's in here. You tell me what the symbols are.
All right, AAL.
AAL, comma.
Yep, Ford, F.
Ford, F, like, yeah, right.
IBM.
IBM, comma.
VZ.
VZ, Verizon.
GM.
GM, yep.
GIS.
GIS, yep.
DIS.
V for Victor.
Oh, I'm sorry, D.
D, oh, Disney, right,
yeah.
Okay.
Number 8 is going to be GPK.
G from Julius.
G. That's in girl.
G, girl. P, K.
Yes, GPK.
Yeah. All right.
XTN.
Yeah.
And then the last one is MA.
Moving average.
Yeah, right. That's what I see.
All right. So here are the stocks. We put them against the S&P 500 index. Hit update. Wow.
Wow, interesting.
Interesting.
Now, somebody did say that, if we're looking at this, where would you actually sell a stock? I mean, maybe this is something.
Yeah, that's the $1 million question. I saw that question in the chat box. Let me get back to that. I'll promise to answer that later, or at least address the question. I'm not sure if I have a 100% answer to that. Let's just have a quick look of what's going on here. We have So now everything is visible. Okay, so what catches my eye? What immediately I see is VZ, which I do not like because I think it moved into, yeah, there you go. It moves from improving into leading, very promising, and then immediately started to turn down, and now over the last few weeks just briefly paused in weakening and is now heading into lagging. So I really do think that is one of the weaker stocks in this universe. Similar for.
Julius, let me just clarify. You are looking at a weekly.
Oh, sorry. Yeah, no. You're absolutely right. Let's jump to a daily. There. Yeah, you're 10 and 10. Yeah, good point. Very good point. Completely different picture.
Yeah, let's look at that.
There you go. Here you go. Hang on. So what's happening now? VZ. Well, it's interesting because this is quite interesting because VZ is now doing really well, but on the weeklies, it's just entering lagging. So I think, and I haven't looked at the price chart yet, reminder, but it could very well be that you have a downtrend, at least from a relative point of view, a downtrend getting underway, which is just going through a little bit of a hiccup after the initial decline, and then starts to roll over again. Let's bring up this chart. That's the other thing that you can do here. So VZ, where are you? Here. Yeah, you just, I always open in a new tab, so I do Control and then click, and it loads up. For me, I have my default template as a bar chart with the red strength line and the RRG lines. Oh, I see what's going on here. Okay, this is interesting. So this is, hang on, this is the weekly. So we have the weekly. It was very weak. You know, you've seen that VZ has been into the lagging quadrant quite some time, and it's now coming out of it. This is jumping down. This is different because it's coming from a very low value, rallied up, and this could be the very first little bit of a correction. It pushes it into the lagging quadrant, but the daily shows some improvement, and you see here on the raw relative strength line that it could be a double bottom. It could be, you know, a trend ending pattern here. So the fact that it is in the lagging quadrant, but after such a big move, makes it not too bad actually. Let's move to the daily. Let me set this to a year, otherwise we'll get all these cramped in bars. Here we see that momentum started to pick up a few weeks ago. This is one of the moves that you will never catch with an RRG or any trend following system. It's just too fast, too much. But it is improving on the weekly scale, and it's improving on the daily as well. And you see that your relative line is starting to curl up. So when this is actually moving into the leading quadrant, which is, chances for that are pretty high because RS ratio is nearing 100, RS momentum is still going higher. Yeah, I would be aggressively interested. It's still on the weeklies is still not too good, and you can what you just saw on the weekly that, you know, we had a lot of downside from a relative point of view, so there is still a lot to recover, but you know, it's definitely not too bad, and especially for the short term, this could have some potential.
Just to interject one comment here, Julius. I mean, looking at that chart and the fact that we have come straight up on Verizon for the last, you know, couple of weeks, and we are threatening that resistance area. Is this a situation where you look at the RRG and you say, hey, this is kind of interesting what's going on in the daily RRG, you know, with it improving so quickly up into that quadrant, heading for the leading quadrant. But now I want to see that price breakout. Is that how you would interpret it? That now we need to get above that prior high?
Yes, for sure. Because the way I look at it, as let me see if I can, does that make sense? If I put them side by side, would that work? I do like this, and then I make this one.
Maybe.
Yeah.
Put that here. Come on, Windows, help me.
We're all about experimentation here.
Yeah, exactly. Here you go.
There you go.
Oh, nice.
This one needs.
Now you got to scroll over there
Yeah, I gotta
at the
scroll
end of
over.
that chart.
Gotta do it like that.
Okay.
It's too bad, but yes, because this is the daily that we're still looking at. Is that right?
No, I think you're on the weekly.
No, in the weekly.
Yeah,
Yeah,
it is.
this is the week. So bring it back to daily. Sorry, guys,
That's okay.
doing
No,
this
we're going
on the fly. On the fly here.
We're good.
Everybody gets to see how to use these tools.
Yeah. So here you go. This is again very steep, and we've had a big move. It's coming from the far left. So if what we need, the way I look at it is that in order for this rotation to continue into leading, we need to take out this 50-51 resistance area. Because if this starts to roll over, as this starts to take a breather on the price chart, there is not enough fuel for the RRG to continue. And you can get a situation where VZ will just quickly roll over, maybe already inside improving, or like GM, enter leading, but not on a very good pace. So there are definitely some risks here. What I'd be monitoring this 50-51 resistance area, see what happens if it comes down. If that is just a little bit of a quick corrective move and then a push higher, you will very likely see a little blip in your relative strength and a turn back up, which will, not affect the momentum line, and it will pull the ratio line higher, and it will pull Verizon inside the leading quadrant. And then we'll have enough upside potential here to move higher and drag this relative line higher. And if that really continues, then we will have a situation on the weekly RRG where Verizon then could turn very quickly around back up and make a short turn back up. Let me make this big again, because I think I can already see what's going on here. You see what I mean? You want to see it like this, otherwise it's not visible. Browse through.
So this is the weekly.
This is the weekly, and it jumps right down. And you see that over the past few weeks, the observations are already getting closer together. So the power behind this move is getting lesser. Add to that it's still very close to the benchmark. And as you know, the stuff that's far away from the benchmark moves strongly, has a lot of alpha. So Verizon now moves very close to the benchmark, which means very, pretty much in line with the benchmark. So, with the daily moving as it is, well, you could have a right pick here, Tom. This I need a little bit more confirmation. I'm not entirely sure. I need a little bit more confirmation. I would like to see this moving into leading, and on the weekly starting to curl back up. But then it's definitely worth looking at.
Yeah, I think what this tells me, Julius, is that looking at the RRG is a lot like looking at the price charts. I mean, you're looking for confirmation one way or the other, whether you're RRG price or vice versa. But you still want to take a look at that big picture, because if you're just
that's actually, I was just reading a couple of comments in the chat box, and people say, I use RRG as a starting point. I look at for the big picture, and that's exactly how you should use it, because it gives you the big picture in one picture. I mean, you can go over all these individual charts as you just did, but now you got, I haven't caught all your comments because I had to reboot my PC because technology was with us today. Right after I handed over my screen, my PC froze. So I quickly rebooted and got back into. So I'm not sure what you actually said about all these 10 in 10 charts. But if we look at a few more, then just let's pick the extremes. For example, AAL and GPK, great examples. I mean, AAL about to head into the leading quadrant, GPK just crossing over into lagging. I just don't hope that you said that GPK was a solid buy and AAL was a solid sell, because then we have a problem. But I cannot imagine that you did that.
Actually, on GPK, I like.
You liked
you
it.
like. Okay, let's look at the chart. Let's look at the chart of GPK.
Because we had the huge gap up, and we're in the gap support.
I may like it, but not yet. That would be my answer. Okay, we're at a weekly again. Look at it. On the weekly, this is pretty good. Mm-hmm. If I would put GPK, this now it's getting interesting. We put GPK on a weekly, I tell you, it's different. Here you go.
Wow.
There it is. And be careful, because we're halfway through the week. So this last bit from the previous observation to the last one is fluid. That's not graved in stone yet. So this is how it looks at last Friday, and this is how it looks at this moment in time, right now. So if we got a couple of good days, it's very well possible that GPK, by the close of Friday, will just continue to move in this, between 40 and 60 degrees heading. Let's jump to the daily for GPK here.
Hey, Julius, we're probably going to we're getting close to the end of the show.
Yep, absolutely.
Maybe do one more, but what I really want is to get your thoughts on, the current rotation in the market and what you just think, about the overall market. What's your prospects, or what do you think they do into year end or in the next year? Maybe you don't care. Maybe you just follow, the relative rotation.
That's true. Well, I don't care, but I look at it. So here is the daily of GPK, gapped up, came back off. You see that coming back into the relative. We haven't set a new low yet, but it looks as if it's going to be higher. So this is a very long period inside leading. We're going through weakening, not very much. So it could very well be through lagging. If we can turn this around, we could have a very swift rotation through lagging and improving and pick it up again where it left off in the weekly. This to me looks like a corrective move in an uptrend that's trying to turn around.
Mm-hmm.
So on the weekly, GPK is already in a relative uptrend, and we went through this little bit of a correction. And it does that very rapidly and very swiftly here. And if we can pick up, if we can keep up the momentum on the weekly, so if we don't drop too far in price, and quite frankly it doesn't look too bad because it's already starting to curl over. So this 14 support level I would keep an eye on. As long as we stay above 14, I think I'd be happy, and I don't expect RRG lines to turn down too badly to put it into the weakening on the weekly RRG.
Okay. Sounds good. Well, this has been very interesting and enlightening. I just want to, maybe before we wrap up the show, I'm going to give you about 60 seconds here, Julius and Aaron, same thing. And, given the fact that, we've had such a big move up in financials and industrials and such a big move down today with technology, what is there anything in particular you're looking for? I know you're longer term, you look longer at the market, but
I'll try to break it into. I mean, if I look, I just brought up the RRG for the sector ETFs just for the sake of it. Technology still, until proven differently, together with financials and materials maybe not so much, but financials and technology still the better sectors from a longer term perspective. And please be careful with Exalvida's healthcare, I believe. Healthcare looks really, really weak, as does industrials for the time being. We looked at industrials earlier. So for the longer term picture, industrials, healthcare, not so sure about that. Technology, financials, pretty good. And if we then, for a shorter term picture, then we've already seen that technology going through a corrective move. Financials, actually, already, we talked about it before the show, Tom, on the way back. So financials could be very interesting right now to look into because the longer term trend is good. It's picking up on the dailies. Technology, just be careful because so far the longer term trend is good, but it's starting to weaken on the dailies, and you would really like to see a turn back up on the dailies, back into leading before jumping on that bandwagon again.
Excellent.
Quickly bring on the healthcare. Well, that's inside improving, but not very much, and doesn't have a very long tail. So my right now I'd say I expect this to roll over before it even gets near to the leading quadrant. So be very careful with healthcare.
All right. Excellent. This has been very informative, Julius, and always is when we have you on the show. But as things change and evolve, we're going to have you back regularly. So definitely mark on your calendar and come back and join us soon.
Be my pleasure.
All right. Thanks. And final thoughts? Any final thoughts here today, Aaron?
Well, I'm definitely looking at the NASDAQ 100 because we are, if you can see here, I think I shared my screen. The PMO is just now starting to give me a sell signal on the NASDAQ. And so I'll be watching that. I want to see if we actually get that signal to pop in today because we just had this really difficult day on the NASDAQ 100 and it's really affected the PMO.
Yeah, it's been awful for the NASDAQ 100, but keep a couple things in mind. Number one, technology clearly getting hit hard today. It's been overbought. It's been the clear leader, as Julia showed throughout the program. But I think, these different pockets of sector rotation, I think, are very healthy for the market. And even though I don't like to see technology taking this kind of a hit, I find it very encouraging that money is finding its way over into other areas of the market, like the transports, like retail, consumer discretionary. Obviously, the financials love the higher treasury yields. That tends to move right to their bottom line. So I still find all the action very encouraging, even though technology is getting hit pretty hard. The other thing with the NASDAQ 100 to keep in mind is it is a non-financial index. There are just a few financial administration stocks. I think PayPal might be in the NASDAQ 100, but you don't have the banks and so forth in there. So they are taking a double hit, one for the poor technology performance and then not also having the financials to help them out. So that's why we're seeing a lot of lagging, a lot of lagging performance there on the NASDAQ side. But just a quick reminder as we wrap up that this Friday I'll be talking about trading strategies with the MACD. Saturday represents our first Chart Watchers newsletter for December, so make sure you're ready and checking your email for that. And next Wednesday, December 5th, Tushar Shande will join the show, and we'll have a very, very interesting conversation with him on how he's trading the market. So looking forward to that. Mark your calendars. Again, want to thank everybody for stopping by today. It was awesome having Julius here. I hope you all enjoyed that. Please complete the survey as you exit the show. Bottom right-hand part of your screen, how'd we do? It's a very brief survey. We'll just take you a couple seconds. We'd love to hear from you. We enjoy the feedback and also any suggestions you have for improving the show. As a reminder, Market Watchers Live now airs 5 days a week from Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Wednesday afternoon, everyone. We'll see you tomorrow. Happy trading.